Why is Puerto Rico taking a retirement option for U.S. citizens?
I think in 2012, Puerto Rico created a law with the objective of encouraging investments to the island. Within that law, within that act, they created a very particular taxation system to attract all kinds of US citizens and foreign citizens to Puerto Rico. One of those incentives, or within those incentives, is the exemption of taxation, or the taxes are exempt for US citizens who move to Puerto Rico and they stay in Puerto Rico and they become Puerto Rican, let's say, residents in Puerto Rico. And this is for people who retire there, or people who actually go and live there, meaning that they open a business, they buy property and they rent it out, they contract people for their businesses, and in addition to that, they also retire there. And the virtue of all this is that if you move to Puerto Rico and the source of your income is Puerto Rico, you will be exempt of taxes with the IRS. That's the big thing. But now remember, many people who work here in the US, they receive, for example, retirement benefits from the Social Security. Mostly they're not taxable. If that is the only source of income in the USA for the person, that retirement income is not taxable. Perhaps a portion of the 15% of the income will be taxable. That is very rare. It's rare, very rare, because that requires a lot that other income goes with the retirement Social Security income. Now, there are other cases when the retirees receive, in addition to Social Security, they receive pension, meaning that, for example, teachers in the United States, they have a pension system where when they retire, they receive a pension in addition to Social Security for the rest of their lives. That's why many teachers who retire, they live comfortable. They receive, say, two sources of income. They receive the pension from the education system, and they also receive the Social Security. If they move to Puerto Rico, it will not make any difference, because their sources of income is the United States, is the continent. Therefore, even though they move to Puerto Rico, the sources of the income is in the United States, because they work in the United States, it will make no difference there.
Got it.
It's different, for example, if the retiree goes to Puerto Rico and he or she only receives income from the Social Security, and they go and set up a business there, and they hire people, or they do any consulting business or anything that they do there in Puerto Rico, and they have Puerto Rican clients there. And perhaps even though if they have clients outside of Puerto Rico, that also will be, but they have, provided that they live in Puerto Rico and the business is in Puerto Rico, they will be free from taxes for that income with the IRS. That is the virtue of this law. I think that for the first 10 years, they will have to pay, they will be exempt from taxes, income tax, and capital gains. I think that it will be only 2%. Capital gain meaning if they own property in Puerto Rico, house or shares of Puerto Rican companies, and they sell it, it will be taxable. If there is any profit, it will be taxable only 2%. In the US is up to 20%.
Oh, okay.
But for income, for regular income, for example, a retiree, a marketing consultant, he or she retires, he receives his pension, his Social Security income from the Social Security Administration, receiving his income. He moves to Puerto Rico, he or she moves to Puerto Rico, and then in Puerto Rico, he or she opens a business to still giving marketing consulting. And then he or she has clients in Puerto Rico or outside of Puerto Rico, but he has actually lived in Puerto Rico, moved to Puerto Rico, lived in Puerto Rico, and his residence in Puerto Rico. So the income that he or she receives from the marketing consulting business will not be taxable in Puerto Rico for 10 years. And it will not be taxable in the US ever, because he is not resident of any state within the continental USA. After 10 years, it will go, the same thing as in the US, like a bracket system, but it's lower than the US. For example, a bracket in the US is up to 35% for depending on the level of the income. But in Puerto Rico is lower, but remember, after 10 years. That's a ratio of retirement for if anyone wants to retire there. But this is not only for retirees. Remember, this is for anyone who wants to go to Puerto Rico to pay less tax, a lower amount of taxes. But you also you always need to remember that only applies to income, any income that is created in Puerto Rico. And how the income is created is when you work in the state. If you work in Puerto Rico, you will create income, and that income is exempt. If you receive income from if you have companies in the US and you receive profits from the company in the US, that will not be exempt from the IRS. You have to pay taxes with the IRS. If you have a property here in the continental USA and you receive rents for that and you make money for that, profits, that also is taxable, regardless if you live in Puerto Rico or you live outside of the US. So if you live in Puerto Rico, the only thing that applies and is free from taxes is the income that is produced within Puerto Rico. And you have to live in Puerto Rico.